So let's go to the trading floor in Chicago, where we have Oliver Sloup standing by. He's with iiTRADER, a regular contributor here on RFD TV and Rural Radio. So, Oliver, thank you for joining us today. A weaker tone here in most of the ag trade this morning on the grain side. Even on the livestock side, it's kind of a tough go. Not the greatest way to start out a week if you're a producer.
Well, we've certainly seen better starts to the week. We do have a little bit of pressure seeping into the market, but this isn't really anything new. We've seen the pressure in the markets over the past several weeks, and I wouldn't be surprised to see that continue a little bit more as we head into Friday's big report. That's going to be, I think, the potential to move the markets. Now, for the corn contract, we're coming up against some key technical support levels. 350 for the May contract is obviously psychologically significant, but if you remember back to December, just above that 350 level was the lows at about 352. So that's going to need to hold on a closing basis to go forward. The funds have been moving money to the short side rather quickly over the past several weeks. Friday's Commitment of Traders report showed that they're about 77,000 contracts short, which is a big reversal from just about a month ago. So they have added to that substantially. I don't know if they want to get too aggressive, though, going into Friday's report, where we could get a shakeup in fundamental catalysts. I
was reading a short time ago where a Newswire story said that Brazil is now over 2/3 done with their soybean harvest already.
Yeah, and I think the South American crop has definitely been putting pressure on the soybeans, as well as talk of more acres here in the States. That's definitely been the fundamental backdrop for the recent pressure in the markets. Now, last week we talked about 992 for that May contract being key technical support, and a break and close below really opens the door towards 960. We've gotten there fairly quickly, just about to that 960 level, but at that 960 level, I think you have an opportunity to step in and re-own some bushels at that price. We have that as key technical support, and once we get there, I think you'll see the market at the RSI dip below 30, which means we're oversold. So maybe a relief rally if we get down to that level. As well, watching the funds, as with corn, they're still about 84,000 contracts long, which is a reduction of about 35,000 from last week. So they're definitely getting a little bit closer to neutral, but still a ways to go until they get there.
How much downside do you see in the wheat trade right now?
You know, the wheat, it looks like a technical graveyard. We've broken through all major key technical support levels. The last really line in the sand, 415, if that gives way, I wouldn't be surprised to see this market dip below that $4 handle in the very near future. But I think a lot of it's going to weigh on the corn and soybean market as well. If those can stabilize, I think that might help offer some support in the wheat market going forward.
All right.